Welcome to Explain the Charts, where we break down complex market data and provide clear insights for traders and investors. Today, November 4th, 2024, we're diving into Google, the stock for Google, the tech giant that's been making headlines for its involvement in the artificial intelligence, AI, race. We'll be looking at the latest news and events impacting the stock and analyzing the chart data to see what trends and patterns we can find. First, let's take a look at the current news surrounding Google. Google's recent quarterly earnings report was strong, indicating that Magnificent Seven stocks are still performing well. Analysts believe that Alphabet and Nvidia shares could surge as the AI boom unfolds, and Google's cloud computing business is a major growth driver for the company. However, Google is facing legal woes, with a U.S. District Court judge ruling that Google must let third-party app stores onto Google Play. The Justice Department may ask for a breakup of Google as a possible antitrust remedy, a decision that could come by August 2025. Additionally, a federal judge ruled that Google has violated antitrust laws by engaging in unfair business tactics to dominate the internet search advertising market. A second phase of the trial will now take place to determine what remedies the federal court will order. Another government antitrust lawsuit versus Google started on September 9, 2024. These legal battles could impact Google's future earnings and stock price, and it's important to keep these developments in mind when analyzing the charts. Now, let's turn our attention to the charts and see if we can spot any correlations between the news and the price action. If we look at the daily chart for Google, we can see a long-term uptrend that has been in place for several years. The stock has consistently made higher highs and higher lows, suggesting a strong bullish sentiment. The recent pullback in price has taken the stock back to a key support level around $125. This level has been tested several times in the past and has held strong. If the stock breaks below this support level, it could signal a bearish reversal and a potential move towards $100. Let's zoom in on the last few months of the daily chart to get a better look at the recent price action. We can see that the stock has been consolidating between $130 and $145 for the past couple of months. This consolidation period is likely due to the uncertainty surrounding the antitrust lawsuits. However, the stock has recently broken out of this range, signaling that the bulls may be taking control. We can see that the stock has already broken above a key resistance level around $135. The next resistance level to watch out for is around $145. If the stock breaks above this level, it could signal a continuation of the uptrend and a potential move towards $160. It's important to note that the daily chart only gives us a broad overview of the market. To get a better understanding of the short-term trends and patterns, we need to look at the hourly and 15-minute charts. Let's switch to the 1-hour chart and see what kind of price action we can find there. We can see that the stock has been trending upwards on the 1-hour chart. The recent pullback in price has brought the stock back to a key support level around $165. This level has been tested several times in the past and has held strong. If the stock breaks below this support level, it could signal a short-term bearish reversal and a potential move towards $160. However, if the stock can hold above this support level, it could continue its upward trend and potentially break above the resistance level around $175. It's important to watch out for the volume on the 1-hour chart as well. Higher volume on breakouts can signal a stronger move. Lower volume on breakouts can signal a weaker move. Finally, let's take a look at the 15-minute chart to see what kind of short-term patterns we can spot. The 15-minute chart shows a lot of volatility, but we can see that the stock has been consolidating around $170 for the past few days. This consolidation period is likely due to the recent news regarding Google's antitrust lawsuits. If the stock can break out of this consolidation range, it could signal a short-term bullish move. The next resistance level to watch out for is around $175. If the stock breaks above this level, it could signal a continuation of the uptrend and a potential move towards $180. On the other hand, if the stock breaks below this consolidation range, it could signal a short-term bearish move. The next support level to watch out for is around $165. If the stock breaks below this level, it could signal a continuation of the downtrend and a potential move towards $160. To recap, the key price levels to watch out for in Google stock are $125 support on the daily chart, $135 resistance on the daily chart, $165 support on the 1-hour chart, $175 resistance on the 1-hour chart, and $170 consolidation range on the 15-minute chart. It's important to monitor the volume on all of the charts to get a better understanding of the strength of the moves. Whether the stock moves up or down, it's important to stay informed and monitor the news and events that could impact the price. It's hard to make any definitive predictions about where the stock will go in the future. The antitrust lawsuits are a major wild card that could impact the stock price. However, based on the current trends and patterns, the stock appears to be poised for a bullish move in the near term. If the stock can break above the $145 resistance level on the daily chart, it could signal a strong bullish move. However, if the stock breaks below the $125 support level on the daily chart, it could signal a strong bearish move. In the short term, the stock is consolidating around $170 on the 15-minute chart. If the stock can break above the $175 resistance level, it could signal a bullish move. However, if the stock breaks below the $165 support level, it could signal a bearish move. Keep an eye on the volume on the 15-minute chart to get a better understanding of the strength of the moves. Remember, trading is risky and past performance is not indicative of future results. Always do your own research and consult with a financial advisor before making any investment decisions. Thank you for watching, and we'll see you in the next video.